Good afternoon, traders. This is Trader Tim from eminimind.com. We're doing a trade recap video for the week. Today is October 13th, 2016. A couple of specific trade setups I want to talk about that you can use going forward. But let's start with the bigger picture and the breakdown below the 61.8, that line in the sand that we had drawn up. And that occurred on Tuesday. We started to drift down right off the open and just kept going right through that 61.8 failure line in the sand, and that's drawn from the overnight low to highs. I'll go ahead and turn on the extended session here for a moment, and you can see that we did rally back quite a bit off of today's lows. We had in the most recent, the swing low down here also had a rally where bulls stepped in. I'm going to go back to just trading hours only. And you can see that we did pierce the swing low, but then closed within the previous lows. So a move down to 2086s is certainly a possibility here. If we go back a little bit further, we can see some of the support back here that the lows of today during trading hours had bounced off of. So this ceiling that we had over here that was resistance is now acting as support. So we very well could get a move back up into this 2150 range. But in the meantime, I'm going to remove the 50% retracement long. We had already failed the short, so we're kind of just in a state of limbo. I'm not going to really be looking at a 50% retracement necessarily by taking a blind limit at 2140s, but I would be interested in seeing how we move up to that level. If we move into a nice series of 15-minute moves, we pause at the 2140 level and start to trade lower. I'd be looking around that 2140 level for perhaps an actionable larger play, whether that's an overnight play with swing trading ETF or weekly options or something that's not necessarily just trading the ES futures, but that should be a pretty hot area, that 2140, to watch out for. Now in terms of setups, I want to first talk about the 5-minute chart. And a lot of times, pretty much every day in the first thing that I'm doing after the gap pre-market gap fill, I'm looking at the 5-minute chart, and I'm doing a couple things. The setup is essentially to bracket the first 5-minute bar, in the essence that we're either going to turn around and fill a larger gap if there is one, or continue the gap in the direction, continue the trend in the direction that we've gapped. So today, for example, Thursday, was a gap down, and the important thing that I look at when we are gapping, I'm not super concerned with how big the gap is. I like it to be more than a few points for it to be substantial, but I want to see us gapping outside of the previous day's range, and that really, the good trending days move outside of the previous day's range versus being stuck within the previous day's range. So we had a gap down this morning, and what I'm looking for is a move outside the previous day's range, and then looking to put a buy stop above highs, a sell stop below lows, 6-tick stop, and then essentially once we move out of that first 5-minute bar, in this case to the downside, then as we start to move lower, I'll just trail my stop above each candle's high all the way down until I'm stopped out. And it's a nice way to get in off an opening move where the market could be a little bit volatile, but if we do start trending, it allows you to get into the market at essentially the earliest, safest opportunity. So let's contrast that with Wednesday, where we had a really small gap. We opened within the previous day's range, and the first 5-minute candle was pretty wide down here. So inside days, or at least at the open, if we're within the previous day's range, I'm not as aggressive with taking trades, and I don't like to take the first 5-minute bar as a trending scenario because there's more of a balance between the bulls and the bears. And so in this case, we end up with a really large first 5-minute candle. We get a little bit of trending action, and then we start to reverse in the other direction. So it's not really worth it for me to try and make something of that. If we go back one more day to Tuesday, and we talked about this in the room, we had a gap down scenario. Again, the size of the gap isn't super critical, but we were outside of the previous day's range. So bracketing that first 5-minute bar, in this case, got a short below the low, and as we start to move lower, I start to trail my stop. And when I get into this scenario where we have a big body candle down and then a couple of inside bars, I'll just leave my stop above that initial big body candle, let the inside bars settle out, market continues with another leg lower, and eventually get taken out down here at the hammer. And so it's, again, a good way to get into the market right off the open, and if we're going to be trending, you're already in with, you know, somewhat of an aggressive stop. And then the same thing was true on Monday, where we were close to we were still within the previous day's range, at least the body of. So you can look at the day's range in two ways. You can see it as the body, where the price had closed and opened, and you can kind of exclude the wicks, if you will. So in this case, we opened right about at highs, still within the entire day's range, but just up above the opening price of the previous day, and so not as quite as strong of a trend. But even if you're trying to, even if you're taking every 5-minute off the open, you still get a little bit of a move, at least an opportunity to tighten your stop. You know, rarely do I get completely whipsawed out of a 5-minute. If you know we're within the previous day's range, it's much more likely to get kind of chopped up because the market is at more of a balance. So that's one setup, the first 5-minute bar, and that goes for, you know, you can do, you know, not just on the ES but other markets as well. And then the second thing I want to talk about today is just kind of run through some of today's setups. So we had the first 5-minute bar short this morning, and now I'm over here on the 512 tick chart, and so we move lower. And then once we got taken out of that, once I got that first 5-minute, the hammer formed down at the bottom here. Down here, got taken out, and then I turned to the 512 tick chart. We started to move higher. We broke the previous swing high, and so drawing from lows to highs. Market came down, touched the 50%, got in the trade, started to move higher. Once we break out of the above the anchor point, then I can trail my stop. I'll leave it down below until we break out of the previous swing high. That way I'm not getting too aggressive and there's a little bit of wiggle room. And then you can take one contract or half of your contracts off at the target and then trail the second half or the second contract, and then continue to do that if you wanted to trade the series. Next anchor point to highs, market pulls back. In this case we didn't get all the way to the target, but by trailing your stop, once the market makes a new high, then you're, you know, at least have a little bit of profit locked in, not taking a loss on the trade. Then the market reversed, and we even came down and broke the full 50% retracement. So I draw from highs to lows, and then, oh, what do you know? This one failed, and we went right through. So this is, you know, an instance where if you're right, typically it's going to be a little bit slower pace, I guess, if you will. If I'm wrong, it's boom, wrong right away, out, move on to the next trade. I don't like, you know, sitting and waiting. If the market's going to blow through an entry, it's going to happen right away. So no harm, no foul. You know, you take one stop in a mix of a handful of trades like this. It's not that bad, not that big of a deal. In terms of the setup itself, breaking a previous swing low, breaking the full 50%, things, I would take that trade every single time. That's just how trading is. You have to be able to take the setups as they appear when they meet your criteria. So if you have too much criteria, you end up never taking a setup and hesitating. If you are wishy-washy, then you're kind of changing your entries back and forth, and that's not healthy either. So continuing on in the day, the 512, we can then look at the next short, and in this case the market came down, and so I'm looking at the looking at this in hindsight, it can be a little bit harder to interpret. So that's one reason I wanted to talk about some of these setups today. And so this is an example of a retest. So this is why I don't tighten my stop right away. We started to sell off, the market pulled back, and the 50 was touched. We had one leg down, but then the market came back and got really dirty in terms of trading to the 50 and through the 61.8. But you'll notice the high was only a 15. So getting in at a 13.75, you're still in the trade, even though to just throw the drawing up on the chart might look a little bit iffy in terms of not that clean and not necessarily that easy to see. Once we start to sell off, once we break the previous swing low down here, now I can take my stop from that -6 and move it up above that candle, and then it at least locks in some profit. Again, didn't get all the way down to the target, but at least it ended up being a profitable trade. And so that's kind of how I go about managing the various trade setups throughout the day. A little bit later on, we did not come all the way back to the 50, but then once we pulled back, broke the previous swing high, you can once again take from lows to highs. Market pulls back to the 50, and then as soon as we break out a high, start trailing your stop up underneath the previous candle. You can take the one off at the -23 and then trail the second, and this is a good example where the market continues through, and so by trailing you end up with an extra couple of points. So that's kind of how I go about looking at the markets on a day-to-day basis, at least here on the futures markets. And if you want to follow along, you can check it out, emoneymind.com/VIP, and if you have questions, shoot me an email, tim@emoneymind.com. Thanks everyone, have a great weekend.